trader deeply, but for the introduction, let us first begin with Deriv trader. Okay, now when you open Rise and Fall, this is how you will see your chart looking. But remember what I told you, don't use this line graph. The line graph is very unstable and tricky, so it will not be able to, you'll not be able to analyze it correctly. So this is how you do it. The first thing is you head over to this over here. As you can see right here, I hope you can see it. You have this small bar section. You click on the first section right there, and then you select 1 minute, 2 minutes, just select 1 minute, and then select candle as I told you, and then press cancel. Okay, after you're done with that, as I told you, never use indicators. If indicators will be working, everyone will be making a profit in the market, but not everyone makes a profit. Why? Because indicators are unreliable. Don't worry, I will show you how you can trade using the market, using how it moves, using the support and resistance and so on. All right, and yeah, this is it. So the main thing we'll be using is the drawing tools. As you can see, you have various drawing tools. Let's click on all drawings. You can see you have all this. So we'll be focusing mostly on the horizontal and the line. Okay, yeah, so basically that is the basic settings. As I told you, to make sure all this area is set correctly. Now, how many ticks do we use in Rise and Fall? In DTrader, I will advise you to either use 5 ticks or 15 minutes. What do I mean? For 5 ticks, you use 5 ticks when you see that the market will behave in a certain way and you are sure of it. So use 5 ticks if you are sure the market will go that way and you are seeing that the trend is moving towards that direction. But 15 minutes is, you know the market will go up, but the market is currently going down. So you put 15 minutes so that the market can go down and then reverse up. All right? So 5 ticks, we use it like for markets that we see it's going in a certain direction. Okay, let me show you. Like for this market, this is a volatility 101, yes. Okay, as you can see, the market is going up right here. All right, and you see that the market is going up, but you're not sure if it's going down. You are halfway. So what is the pattern? The bar is going up and then it's going down. It's going up and then retracting, going up and retracting. But it is a risky move, but it's very interesting. So what you can do is stake a very small amount just to try the strategy. Remember, there is no strategy which is 100%. Anyone who tells you their strategy is 100%, they are lying to you. And remember, here we don't lie. So the best strategy, I can say 99%, but 100, no, there is no strategy that is 100%. Okay? The best strategies are 99 to 95%, from 95% to 99% accurate, the most favorable strategies. Okay? As you can see, this market is not predictable, but I will show you how you can analyze it. Okay, let's do this. So the first thing is you want to put your chart to 5 minutes. So we set our chart to 1 minute so that you can change the candle bar. But if you want to analyze the market correctly in DTrader, and I'm emphasizing on DTrader, don't go using this in many other apps. Okay, if it is in DTrader alone, you will come here and so you come and pick to drawings, come to drawings, all drawings, and then you pick a line. So you have a horizontal line and you have a vertical line. So you can pick both. You pick that one and then you come back again. All right, and then you pick the line. I don't know if they've been added. You can come and confirm to see if, so you have not added them. So you click again. Make sure you click because it kind of lags, okay? All right, there it is. This is our first line. Oh, you double click, sorry. I was clicking once, that's why it was refusing. And then you double click again. Okay, you can just even use the horizontal line. I don't know why the vertical line is not responding, but let's try again. Okay. Yeah, there it is. Now, how do you use this tool? Now, let us take this one and drag it here because we won't use it for now. Now, you can ask yourself, what is the highest point the market has gone lately? What is the highest point? So if you want to see the highest point the market has gone, you go to a higher time frame. So you come here and then you select, let's say 1 hour. All right. Now, when you select 1 hour, you scroll, you go back, you go back, you go back, you go back. Then you see, wow, the highest point the market went was about here, right? And then you ask yourself, For the last 1 hour, how has the market been moving? It seems to be going in a downtrend. So you can take your line. If you see that it is not conforming to the pattern, just cancel it. So you'll come here. As you can see, you cannot modify our line to fit the trend. So you come and select trend. Okay. Okay, so you come here. All right. So you pick this thing right here. Okay. So you come and pull it right here like this, like this. Yeah, right there. And then you pull it like this. And then you drag it down. After you do that, just click outside the box. All right. There it is. So you can modify it. Yeah. Yeah, that's it. So as you can see, our market is moving down. Okay. So how do we place our trade? So we have already established that the market is going down. All right. So we move from 1 hour and then you confirm our analysis in a 30 minutes time frame. We see how the market is behaving in a 30 minutes time frame. And then again, we scroll out like this. And then you see, okay, the market seems to be going up. All right. So we have two contradicting. So according to 1 hour, we can see the market is moving down. And according to 30 minutes, the market is going up. Again, we come back again here and go to a 15-minute time frame. All right. And then you scroll out. As you can see, the market is going up again. Right? No problem. Just go to a 10 minutes until you reach 1 minute. Okay, we come back here. We scroll out again. And what can we see? The market again is going up. All right. So we have 3 time frames where the market is going up. Okay. That is 3 to 1. All right. We come to 5 minutes. When you come to 5 minutes, you scroll out again to see how the market is behaving. As you can see, it is going up. All right. I hope you can all see that analysis. Okay. It is going up. All right. And then we come to 3 minutes. Again, the market seems to be going up. Okay, I cannot even add another one. Let me add something else. What can I add right here? So you can use any of these. Just these are to help you analyze the chart. All right. You can use any of these. I don't know why. Let me try again. It's kind of lagging. Oh, never use indicators. Remember that. Never use indicators. Only use drawing tools. All right. Use only. Oh yeah, there's our line. So you can shift it. Okay, the line is movable. You can move it in circles. You can change if you want it to go up like this, or right or down. So, and then you scroll out. As you can see, there is our 3 minute time frame, and our 2 minutes. You'll all see that it's going up. So you can see it is still going up right here. The market is still going up, and according to 1 minute. Okay. So what have you established? The market seems to be going up, but don't be in a hurry yet. Okay. Now let me show you how I do this. So you go back to, I usually like to use 5 minutes. 5 minutes is the most reliable for short time frames. If you want to use ticks, use the 5 minute candle bar time frame. Now you scroll out like this, and then now this is the trick. First you place this right here to establish the trend. Okay. Okay. So okay, like that. So you have seen that the market is moving up like that. So we place that right there. And then we come, I don't know, we had another line. Let me, our horizontal line. Okay, go to all drawings. So, and then you take our horizontal and place it at the peaks of the recent candle peak. So as a candle bar chart moves, it establishes various peaks. Let me show you. So this is a peak right here. This is another peak, another peak. All these are peaks right here. A peak is the highest point a candle goes, and then it returns down. Okay, so what do I mean? A peak is the highest point a candle bar goes in a certain time frame. So you have seen all these peaks. So you have 3 peaks. You have this one, and this one. And also you have this. So what do you see? The last point, the last time this peak almost touches our white horizontal line, it goes down. As you can see right here, it went down. Okay, let me zoom in so that you can see clearly. As you can see, let me zoom right here. When it touched our white line, our horizontal, it is movable. It moved down. As you can see, every time the peak nears our white line, it moves down. Let me zoom in. Let me go. Yeah, because you can see right there, it touched it and moved down. It touched it again, moved down. As you can see, it went above and then it came down. It came down. So if you could have placed a trade in any of these points, you could have made a profit. So how do you use it? So if you're a patient person, you will wait for this green bar to touch the white line, and then you place a fall. As you can see, it has a nice profit. A 90.24% profit is a very, very nice profit. So you could have waited. You should wait for this green bar to touch the white line, and then you place fall. Now, before you place fall, you give it some time. You know, sometimes it can touch the white line and then go above a little bit and then come down. So if you placed your trade right here in a short time frame, it can go up and then you can end up losing your money. So anytime it touches the white line, come here. Where is our, okay, come to minutes and then you place 15 minutes. I repeat, 15 minutes, okay? Anytime it needs to touch that white line or it touches the white line, you place fall and then you place on a 15-minute time frame, so that in case even it goes above that white line, you will not make a loss. I hope you've understood that point clearly. For those who have not understood, my number is in the bio. You can WhatsApp me or you can comment on the comment section and I will answer you. As you can see, this is what I mean. When I zoom out, you can see anytime it nears the white line, it goes down. It goes down. As you can see at this point right here. Okay, I don't know if I have a, let me see. Okay, no problem. So, as you can see, it touched at this point right here, it went down. And then it touched here, it went down, here it went down. Yeah, and then it touched here again, it went down, here it went down, over. As you can see, you have, I hope for those using your phones, you can place your phones horizontally or in landscape mode so that you can see what I'm meaning. As you can see, what I'm saying is the white line, the candle trend or the candle bar trend touched the white line, and when it touched it, it went down. And it repeated this how many times? 1, 2, all right, 3, 4, 5, and it will repeat the same thing again. So what we'll do is we'll wait for this candle bar to touch the white line, and then you place a sell. Now you're wondering, what if I don't have the patience? Okay, for the risk takers, okay, or for the risk warriors as I call them, and you like to use ticks or a short minute time frame, don't worry, I also got your solution. Now, you have established that it will go to the white line. So what does that mean? It has a uptrend. Now, if you want to risk using ticks, I will show you how you can do this. So you come here and observe how is the candle behaving. So you already know it will go up, but remember, before it goes up, it can go up and then it comes down again, and then it goes up again, it comes down like that. It can repeat that various times. So if you want to risk it, let me show you can do this. So you come here and you see, okay, this is a green bar, okay? Obviously it is going up, but I'm not sure. So what you'll do is you'll wait for this green bar to go down, and then you place a rise in a 5-tick time frame. Let me show you. So there it has gone down. All right. Let me show you. So it goes down. Let's wait for it to go down again. Down, down, a rise. Wait for it. Okay. 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 As you can see, a loss. Why? This is a very risky market. That's why you should prefer trading using minutes. But you can try again. You can come and analyze. Okay, so that one, it did not go correctly. Come and double your stake. Never fear. So you can come and let's say 0.41 and then you put 1.41. If you have a big account, remember, if you have an account less than $10, only use a 0.35%. If you have an account between $10 to $20, use a 0.5041%. If you're using between $10 and $100, you can trade using $1. That one you're allowed. As you can see, even though you went at a loss, as you can see the market, you could have made a profit if you would have if you would have placed a 15-minute time frame. Okay, that's what I'm saying. A high time frame is more favorable as compared to a lower time frame, because a higher time frame, you can give the market a moment for it to change or conform to any of its standards, and then you can undergo your profit. Now, when you place a higher time frame, you can the market can go down, it can go up, but at the end, it will go to your direction and will make a profit. So I will not advise you to trade using the ticks. Many of you, I know you have tried using ticks to trade rise and fall, and you've made a loss. So I wanted to show you that ticks is very unfavorable for rise and fall. Only use a higher time frame. Like here, if it will have me, I know the market will go to the white line. Okay, so I will have placed a 15-minute time frame to give the market a moment for it to go to the white line, or I would have waited for it to reach here and then I place a fall on a 15-minute time frame. So as you can see here, you have two options. You can place 15 minutes on rise right here, or you wait for it to touch this white line and then you place 15 minutes on fall. So you have two options. So please, in this market, don't trade mostly using ticks. Ticks will make you lose your money, especially for rise and fall. Okay, rise and fall is traded by everyone in the world. I know most of you have seen forex traders, and everyone usually trade rise and fall. Basically, these markets are rise and fall. So I hope you have all understood that point. Let me show you how you can place a 15-minute time frame. So if you want to place a 15-minute time frame, you can come to minutes, and then you set to 15. And then because we know our market will go to the white, is going up, we have done our analysis and you are sure of it. Okay, so we have to, right? As you can see, the market is going up right here. And then at right here, we know that this is the peak at the current moment. So we can come just and place rise, and you are sure of our analysis. And then we place rise, because we know now at the end of all these 15 minutes, as you can see, we will undergo our profit. So guys, go try that, go practice it. For those who have a difficult time, just let me know. As you can see, undergoing a profit because we know the market will go up. So guys, go practice it and let me know how it goes for you. And please only use 15-minute time frame. Don't use ticks for this market, you'll undergo a loss. So be sure, make your analysis, put this so use these two. You have the horizontal line and the vertical. Use them. And yeah, I hope you make a profit. Okay, thank you for watching and good luck.